The cost of car insurance has caused a lot of struggle for people, and we don't fully understand how impactful that is to some. So I wanted to go over and explain just the impact of how high car insurance has caused a lot of struggles for a lot of Americans. What we haven't noticed is back in 2022, 2021, all of the things happened. Everybody worked from home, nobody was driving, half the people quit their jobs. All of a sudden, people were buying new cars because they could afford them, they were making more money, there was increases in pay, all of those benefits that you would see. The negative is you saw a decrease in materials. Precious metals started to disappear, which were in catalytic converters and parts to cars, computer systems. All of those things started to be harder to get a hold of, and people didn't realize that was going to impact their car insurance. Add to that, when we got out of the whole scenario and everyone started driving back to work, there's probably 30-40% of the US had to go back to work, and then now it's becoming 50 and 60%. It's kind of that back to work mentality, and that has caused a lot more claims. Those claims, oddly enough, are causing more injuries. The cost of those materials weren't just the cars that were costing more, it was the medical equipment, so the medical costs more. All of the things that we think car insurance is causing to rise because car insurance is trying to make up for X, Y, and Z is true, because they're trying to pay the bill while making the profit. And so it's hard for them to go in between both of these to where the customer's happy, they're making enough money, and they're paying the right amount of claims. Some companies you're starting to see weren't as good companies as you thought they were. They're not able to pay the claims quickly, or they aren't able to meet the price that the customer wants. And in general, that impact on your financial situation is about a 20 to 30% increase from what it used to be 5 years ago. But in the US, you have to have a car to drive. You need to get to the job site. You have to X, Y, and Z, unless you found that perfect sweet spot that now you're working 30, 40 hours from home. And that's very difficult to find, especially with the way that unemployment has increased due to a lot of these factors. With the addition of now the tariffs coming into play, there's an additional increase that we may start seeing. Now, a lot of people may have started to say, well, Mark, we also talked a lot about the weather-related claims, and that's not so much a factor today as it was the year before. There was a lot of wildfires happening in California, and yes, that crushed a lot of State Farm. They didn't even put a Super Bowl commercial ad out anymore. They needed to save some money because they literally just bounced back from being downgraded from stable to a little bit less stable. It's from an A to a B. They went back to an A, if I'm not mistaken, and so they're probably at risk to going back to a B. That means that their ability to pay out claims has been decreasing. And that's a little bit scary. Look at JCPenney, look at Sears, look at all these conglomerate companies that have a heavier margin that they have to make up for, or they could fall altogether. Now, I don't think necessarily that State Farm is in that boat. That being said, I hate you, State Farm, because they are my competitor, but I don't think that they're necessarily going to go under for any specific reason. That is an example of what we're seeing, but that's really just a couple companies. State Farm, I believe Travelers had some losses in California when all of those happened. But you got to remember, they already started planning for this 2 years ago. What they did is, because some states didn't allow them to use predictive models where they could say, well, there's going to be this many wildfires or this many claims. The states know the price is going to go up. They know the risk is there, but they don't want the consumer to pay for it, which is one of the benefits that they have fighting for your behalf. These insurance companies are here to make a profit, so they want to make that 10% profit or 20% profit, but they have to price the product accordingly. That has already been predicted, but the ones that can't predict it, what they do is they'll turn around and reinsure themselves. So they'll actually say, we're only on the hook for $1 billion or $2 billion or whatever number they set, and they purchase insurance. So anything after that amount, the other insurance company picks up the difference. So they're paying a company to be paid to pay you. And that's a benefit, but a lot of these companies, they're usually out of China or different countries or wherever they're getting insurance from, those companies are starting to raise their prices, which in turn causes that to inflate to you. Here's the thing. Insurance is usually about 5 or less % of your national income. The average income, I believe, is 70 some odd thousand per, I think it's per person, might be per household, not 100% sure. Not an economist. I know insurance really well. And that being said, that you're only spending, let's just say $5,000 per year, which is actually high in my opinion. If you're paying more than $5,000, I'll put a link in the description below. You need to shop it. We'll help you find it. Actually, I just cut someone's bill from $10,000 to $5,000, which was a lot nicer home, nicer cars. All that's pretty cool. Most people are paying about $3,000 on average, a little bit less in some states, a little bit more in others. And those are the numbers that we're starting to see. So you're seeing a small percentage, 5% or lower, of your actual income going towards insurance. Well, then how come everyone's talking about how insurance is the biggest bill and it's horrible and they're all of these things? Partially because a lot of people hate insurance. In general, they're just against the fact that companies make money on taking risks or assuming the risk or evaluating the risk of someone else. It does feel a little bit odd that a company would take a bet on you based on the numbers that it knows. They have all the information, they took the time to build it to know that you're going to pay more for their service than odds are you'll pay out. But there's odds that you'll need 10 times more than that, so we're willing to pay that. On top of it, I get it in the comments, you can leave it, everyone does, and I don't mind it. Feel free to be open as long as you're not swearing. It blocks all swear words. In general, insurance is required, and that's something that every state has regulated. Car insurance is mandatory. Home insurance, not so much, but everyone has a loan, and if you have a loan, you have to have it because of the loan. So that's actually the loan company, not the insurance company, that's forcing that. Altogether, if you have a home, if you have a good car, if you're trying to get to work, you're now paying for gas, you're now paying for repairs, you're now paying for the medical, and all of those added up, more than literally half your check or more is going out the door just to support living in the house, driving the car to work, to earn the money, to pay the taxes. All of those pieces that are adding up are causing financial ruin for most Americans. Now, I need your opinion because I am not typically the channel to write about income and disasters and all those things. I'm more of the insurance guy, right? If you want to learn how to save money on insurance, you want to learn the coverages you carry, you want to learn some of the updates in the news, those are the things that we try to focus on. But because of all of the rate increases, 30% the last couple of years, 12% the years before, we're seeing an average of 6 to 12% now. Some companies are going down, so if you don't know the right companies, you need to talk to the right agents. And all of those pieces are starting to play a factor. There's kind of chaos in the industry. And I thought this video was needed because there are big impacts that insurances are having. But in general, you're seeing more of an impact of what's happening around insurance. They're trying to react in different ways, and it's affecting Americans harder than it should have previously. Let me know what your thoughts are. Have you been affected by your car insurance or home insurance or insurance in general that has caused a lot of turmoil in your financial stability? Let me know in the comments below. I'm curious to know if you know someone that is in those situations. It's good for us to share that and at least get the advice and see what processes that should be in place to help improve things like that. I'm Mark with Think Insurance. I'll see you in the next one.